Hi, this is Finance and Investing, just Joey Style, and I'm going to go over a few things today. Just my overall account. I'll show you my crypto account. I'll show you my stock account, my mindset. We'll go over a little bit of news of what's going on in the world. Um, I'll show you a couple things that I look for when I'm looking at companies. So we'll start there. Okay. Yeah, I just want to make sure that it's recording. Okay. So here's a free site. You can sign up with your email, financecharts.com. This will help you look at free cash flow per share. This is one of the biggest metrics that I look at for companies to do well into the future. Um, so, just a quick example: companies can't do anything without cash flow. So, if you have like a lawnmower business, and let's say you have 10 lawns that you're mowing, and it's $50 a lawn. So, you mow 10 lawns, you just made 500 bucks, right? Not necessarily. You have to get paid. So after you mow the lawn, every person that you went up to their door, they said, "Hey, I don't have any cash right now. I'll have to get you next week or the next time I see you." Like, okay, there's nothing you can do about it because you already did the job and you need gas for your mowers, weed whacker string, maybe blades sharpened, whatever, gas for the truck. You need a lot of equipment. You need money to keep your equipment running so that you can cut grass again so that you can get paid the next time. Well, without that cash flow, you're not going to be able to buy anything. You can't do anything. You can't get a new lawnmower. You can't get gas for your weed whacker. You can't get oil. You can't get weed whacker string. You can't do any of that stuff because you didn't get paid. So, free cash flow is extremely important for how companies work into the future. Um, MSTR's free cash flow is not the greatest, but recently it's been coming up. And this company is evaluated a little differently. So it's this chart is not entirely accurate on their cash flow, but it will give you somewhat of an idea. Anyhow, I'm going to show you a couple different ones. Oh, and how to set this chart up. Whenever you set the account up, you just go to charts, and then here in performance charts, you'll see free cash flow per share or free cash flow, and it'll give you this. And then all you have to do is um, type in a ticker symbol and it'll give you the charts. So Nvidia, let's look at the last 10 years of Nvidia's free cash flow per share. Look at this, just absolutely skyrocketing, just straight up. They have over $100 billion in free cash flow per share, free cash flow. So that's nuts, not per share, just free cash flow. So Nvidia is an incredible company. It's the biggest company in the entire world, and that's why. I'm going to show you AMD too. This is another thing. Whenever a stock is being suppressed, look at their free cash flow per share. Same thing, almost daggone straight up. Obviously, not anywhere near as much as NVIDIA, but it's going up and up and up. Now, let's look at the chart on AMD. Maybe if it loads. There we go. Actually, I have it over here. Come on. Computer's running a little slow. So, AMD's stock over the last year has done incredible. But in 2024, it didn't. This thing went from $200 a share all the way down to 70 something, 80, 75, $80 on its low. And then since its $80 low, it's skyrocketed. But here in May of 2025, oops, let's go back to the other chart. May 2025. Yeah, their free cash flow per share really started to come up then and just skyrocketed, and then price followed. So whenever you have companies that have good free cash flow per share, they're usually very good companies. Now, SoundHound, I love this company. The only thing I don't like about it is its free cash flow per share isn't the best, but they're still not a profitable company. It's the only thing that's going against them, but they're growing like a weed. I think this is turning into a nice long-term hold, but I'd only buy this under $10 for the long term currently. We're gonna go with SoFi. You know what? No, no, there is SoFi. I do tell people about a SoFi trade. SoFi's free cash flow per share or free cash flow did very, very well, and it's starting to fall off again. I have to look into see what that is, but SoFi in general, I like this business long term, and it should do well. Um, but yeah, I want to see this free cash flow improve. See, I'm trying to think what else we got. So here's some other things that I do that I look at for what's going on in the macro conditions. So this is the overall fear and greed indicators. Right now we're in greed. We just got into greed, so this isn't really looking like sell time. But if this thing starts to creep up to 75 and maybe get into extreme greed, we might we might be in a good place to start selling some companies off that have been running because we could come back down. So you can kind of change these. This is like buy, this is sell, this is extreme sell, this is extreme buy. So you can use this indicator differently for when to buy and when to maybe start taking some profits if you're trading or even if you're in the long term investing mindset. Gee, many Christmas advertisements all over the place. This is a fear and greed indicator for crypto. It just started to creep back into neutral, which is good. It was in fear, so I think crypto has been a buy. I mean, we had some extremely like the lowest metric we ever had on this thing back in February. So I think crypto is still a buy, and I think it could have a nice little pop in the short term. But I'm a little bit short term bearish too on crypto. Let me go over to the Bitcoin chart. So here's the Bitcoin chart on the daily. As you can see, we had that death cross back here, December 2025. And then we fell pretty hard. Looks like we had a bottom. Oh, wait a minute. This is Ethereum, not Bitcoin. There we go. Wrong chart. Wrong chart. There we go. Bitcoin. We did have a death cross, but we had this one in November. So that's a pretty good sign to maybe take some profits and get out. And it did. It fell pretty hard, and then it started to bounce back up. This is usually what happens in downtrend or bear market. We can have rises, and even in a bull market, we can have falls. So and then we fell pretty daggone hard down here, the $60,000 level. We've come up pretty good. But what I don't like about this chart is we have had some nice run. Well, we're above the 5 and 13 or above the 50. We're flirting with the 50 again, which is acting as support. It's going to be hard as heck to get above 81, 82,000 at the 200-day moving average. I mean, the RSI cooled off. The MACD did fall, but it's looking like it's starting to maybe curl again. I didn't notice that we were at the 50, so I did sell a little bit of Bitcoin, which is very outside of my nature, but I think this still is a little bit short-term bearish. And if the 13 crosses below the 5 again, I'm sorry, the 5 crosses below the 50 and the 13 follows, then yeah, I sold about 10% of my Bitcoin position and got a limit order to buy back in at 73,000. I think that's about where it's going to come back down to, somewhere in here. I think it's actually going to drop farther, but I'm putting it there. Get an extra 2%. And if I'm wrong on it, then I won't be exactly happy with this decision. My short-term trades are okay. My long-term stuff is better. That's what I do the best. All that money, if I don't get back into Bitcoin at 73, then I'll take that money and I'll probably put combination of H bar, tau, and chain link because I'm not quite at my full positions in those yet. Let's see here. Let's come over here actually and go to my portfolio in Robinhood. This is my educational account. I showed people how devastating it can be over leveraged with margin and options and the market taking a turn and sentiment changing and not having the right guidance and not having a lot of experience. You can really do devastating things to your account. And I'll show you. This is my last year performance of this account. It was at $92,000. It fell all the way down to actually 8 grand. Now it's sitting around 14. I'm still on margin. I'm trying to get off of margin with a big Soundhound trade, and I think that Soundhound is a great trade, and I plan on getting out of most of these shares between $12 to $15, maybe 17, just depends on how sentiment goes. My average price is just a little over $8, and then I have 500 shares that I'm maybe selling this week at $9. Those were bought in the sevens, so I'm going to make a little bit of money, free up some margin. That way I don't have anything in my account that I've got to worry about potential margin call because of this volatility, and then also potentially take advantage of some other trading opportunities in the short term. But what I do the best is long-term investing. So I have a quick start guide that's only $25, and I have a community. I'm also working with somebody to create website and some other things so that I can, if you don't want to be a part of my community, which is free anyhow, which I don't know why you wouldn't want to talk to me, but if you want my paid quick start guide, you can get it there. Eventually, I'll put links and stuff out whenever it's ready. But one of the best things that I've done recently was I helped an 11-month-year-old girl. I had her parents. They reached out to me and we got a hold of. We set up their account so that she could be investing. And as of tomorrow morning, she will own assets. She will own companies because her buys will start to go through. It took us 45 minutes to set up the brokerage account, the type of account, the amount of money that they decided they wanted to put in every month, and then we automated it. And literally every single week, there'll be a small amount of money going into this girl's account. And then by the time she turns 21 years old, she'll have 20 years of investing under her belt. So she'll be able to build up ownership from a small amount of money over time, giving her a head start in life. So I highly recommend people do that for their children. If you're 45 and younger, I highly recommend that you're looking into supplementing your 401k because you probably don't have enough to retire. And I would look into how much money you actually need to retire. Just a simple Google search will tell you that safe withdrawal rate's 4%. And then you can ask how that works. But basically, if you have $1 million, it's $40,000 a year that you can take out. That's not a great retirement. So people, I think, need more money than they realize for retirement. And your 401k is probably nowhere near there, given the statistics. And then anybody that's 18 to 25, I can help you with budgeting and investing choices to better your life over the long term, give you some principles for that. So if you want to do that stuff, you can. If not, that's fine too. And then here's my free stuff that I give you. And this is good stuff. So MSTR, HIMS, and BMNR, those are my 3 companies that I'm building in these accounts. I don't think there's any more companies that I need. This is a $14,000 account right now. I have $3 a day going into all 3 of these stocks. So $9 a day actually turns into just shy of $200 a month, Monday through Friday. So I'm building up these shares, and these companies I think are going to do incredible over time. MSTR, I very much so believe in Bitcoin. I've studied it for over 1,000 hours. I understand the network and what it does. And as world adoption comes, it's going to get better and better. And MSTR is the biggest corporate holder of Bitcoin. They have basically 850,000 of them. And let's talk about Bitcoin for a quick second. It's a network, kind of like the internet. It's connected. It's been successfully transmitted Bitcoin over radio waves at one point. It's energy. it's data, it's cryptography. It's just an amazing thing. Right now, the United States military is starting to put information on Bitcoin's blockchain for encryption, for safety. So this we're not even talking about finance, we're talking about computer science. Bitcoin is more versatile than most people realize, and it will stay the big boy in the crypto market for a long time. Also, let's think about this. There's only going to be 21 million coins ever, so just the scarcity level of it. Right now, Michael Saylor, MSTR, this company owns 850,000. BlackRock has about 820. There will be some inflows and outflows of how much they hold, so there'll be a little bit of selling for like tax loss harvesting and different ways their corporate people think that is best for the shareholders in the company. Um, but basically, you can chalk it up to about 1.5 million Bitcoin are going to be locked up just from these two companies alone, BlackRock and MSTR. And then, real quick, I'm going to show you BitcoinTreasuries.com or .net. Sorry. And stretch is usually one of the big things that is put on here. And Michael Saylor can buy a lot of Bitcoin via their stretch product. And also SATA is doing the same thing from Strive. So these are all the companies that are currently holding Bitcoin. Your top 10 is where you kind of want to look at. I mean, anything above 10,000. And then SpaceX has reported that they have about 18,000 Bitcoin. So you've got a little over 100, 150,000 that are locked up between these companies that are going to be, let's see here, Mara, Metaplanet, 21 Capital, Coinbase, Riot, Strive, and CleanSpark and Tesla. They shouldn't, I'd be shocked if they sell any of their Bitcoin. Then we also have an announcement from the United States. Last year, they were doing a strategic Bitcoin reserve, and they want to hold about 5% of Bitcoin. They've been updating us lately on what's going on with that, and they're making progress to have 5% of Bitcoin held in a strategic reserve for the United States of America because digital assets are becoming an asset that you should hold. So, between the United States, BlackRock, and MicroStrategies, and these companies, you're going to have almost 3 million, actually closer to 3 million Bitcoin locked up, held. So, that means there's only about 18 million that are actually circulating out there. And institutions, Morgan Stanley's getting into it, JP Morgan, there's a bunch of ETFs coming. That means more and more scarcity is coming to Bitcoin. That's less that other people can have, and the more people that hoard it, countries, sovereign wealth funds, institutions, states, individual people, that's going to allow the price to rise. Plus the adoption for just the that all it does. So Bitcoin's absolutely incredible. Let's see what else we are going to talk about here. MSTR. It's also a digital credit. They've created digital credit. So credit companies, insurance companies, they hold a lot of Bitcoin. I'm very, very bullish, not just on the price of Bitcoin. I think just the overall network and adoption of Bitcoin over time. And I think this is going to be one of the best companies that's going to grow with Bitcoin, and the reputation is there. I think Bitcoin is going to be over $1 million a coin within the next 3 to 7 years, and MSTR is on point to have over 1 million Bitcoin this year. So 1 million Bitcoin at $1 million a piece, that's $1 trillion valuation, and their company is only worth somewhere between 50 and 60 billion dollars right now. If it loads, I'll show you the market cap. Market cap is also extremely important to understand, and I'll show you in a second why. With AMD, where are we at? Right here, yeah, $56 billion. So this is basically just what their Bitcoin is worth. This company is only evaluated at 1 to 1. This is more fair value when you get towards like 300 to $350 a share. So this is very undervalued. I highly recommend buying this company. Now, also, I got to state, don't sue me. Make your own decisions. You're an adult. Be accountable for your own life. Do your own research. Don't just say, "Hey, this guy on the internet told me to buy this, and I did, and I lost money." Well, you're an idiot if you do that. You got to, you got to, you got to vet people. You got to have a way to do research your own self. But yeah, don't sue people because you didn't do your own research. That doesn't make any sense. Um, but yeah, MSTR is incredible. Hims. Hims is an absolutely remarkable company. Oh, and I wanted to show you something, and I think I'll do it with MSTR with the chart. Yeah, I want to drastically build this company up. It's got a pretty good rating. It's only a $5.4 billion market cap. There's a company that, okay, this is healthcare, but I look at it more like Netflix and distribution. So it's kind of like Netflix and Amazon for healthcare. Um, Novo is a $200 billion company, 199 billion. And back in February, they actually sued Hims because they were doing something with their GLP-1 drug. I can't remember what the heck it is off the top of my head because there's a couple of them. Um, and they sued them for what they were doing with their drug. And then they decided to partner with them literally like a month later. That's insane. And so a big $200 billion company sues a $5 billion company and then partners with them because of their distribution rails being better than their own companies. So Hims is absolutely incredible. They're vertically integrated. They own everything. Their management team is world class, and they meet my four pillars: innovation, adaptation, world class management, and adoption. Um, and as they get into biomarkers and into international, this company is going to grow. And with a $5 billion market cap, this thing could get to 50 to 500 billion for sure, I think, in the next 15 years. So we're looking at a potential 100x on this company. And I don't like to be overly hypey on things, but I really do think this company is absolutely incredible in what they do. And I was very right whenever they fell all the way down here to 14 bucks. I said, this is an absolute steal for this company. And then it went from 14 back up to $30 in 6 weeks. So it doubled in 6 weeks. And everybody told me that I didn't know what I was talking about when this company fell down here. They said it's a horrible thing. It's trash. It's garbage. Get out. And then it came up. Now, yeah, it's coming back down a little bit, but the charts actually look pretty decent. Uh, they didn't do great on earnings this last time, but I'm not too worried about the short-term earnings. Um, just look at the charts. I think the charts look pretty good. MACD has come down. It looks like it's starting to maybe try to curl a little bit, but it's still broken. It looks like it's still trending downward. It is a support zone that I drew here a little way back. So it hit there. That was before it kind of fell off. And it hit there too. So it's pretty much right at support. I don't think we're going to have too much more downside to this company. If we do, it's going to come down to about $19, $20. So I think under $25 is a great price for this company. Actually, I think under $40 is a great price for this company. So just continuously buy shares of this. Once it breaks above the 200-day moving average, I think this thing can get back into the $40 to $60 range fairly quickly. So if you're looking for a trade on this thing, short-term trade, getting back up to $30 is pretty solid. 40 is your next stop, and then 50 and 60. Now, trade on this thing can take anywhere between 3 to 18 months to hit those levels between 30 and 40. That could get there too, to the 50 and 60 in the next 18 months, but we'll see if it does. There's one thing that I want to show you. So this is the longer term chart of Hims. Now it's not all that old. It's only 2019. But this thing was $10 a share for a while, fell all the way down to the $4, $5, $6 range. If you would have been buying shares of this since 2019 and just picking up shares continuously over time, even on the run up, and been buying all the way down, you would have an absurd amount of shares of this company. And as this rises back up to these levels, and you acquire more and more shares of this company, when it gets back up here, your your uh, your value of your company is going to be worth more. Now, investing, we got to remember it's not about now. We're not worried. Too many people are worried about this number currently. It's not about right now because generally in investing, you don't need your money now. You need your money 5 years from now, 10 years from now, 20 years from now. So this price doesn't bother me at all being lower than it was here. This is great because it's better evaluation. I can pick up more cheaper. Ownership is very, very important. And then I think over time, this stock is going to be one of those that stock splits over time. So if you're building up shares now and you pick up a couple hundred over the next couple of years, and then we do a 10-to-1 stock split when this thing starts to rise, that I believe it will, maybe a 5-to-1 stock split. You'll get 5 times as many shares, and then we can do awesome things when we get into certain zones. Like right now, it's in a buy zone, so I wouldn't be selling too many covered calls on this just yet because I think it's still, like I said, to me, it's bullish, and I wouldn't sell covered calls probably below 30. Yeah, I wouldn't sell them below 30, that's for sure. 30, 32. Um, but covered calls is a way to generate income, and I like to do these about a month out on the third Friday for extra additional liquidity. But if we go up to sell call around the $30 mark, somewhere between 30 and 32, this is $23 to $40 per contract. So if you had 1,000 shares of this and you wanted to sell $30 covered calls 3 weeks out, 24 days, you can make $40 per contract, which is $400 on 1,000 shares, which would be currently about 23 grand. Is that right? 100, yeah. If you had $23,000 in this, you could make 400 bucks with an upside potential of $6.33 per share, which is about a 25% upside. So you have 25% upside on this potential trade. Buy HIMS now, sell $30 covered calls until it hits, collect premium along the way, and then get your increased 25%, pull it out, and find another trade. That's what I'd do. But ultimately, I think you should acquire shares of this company long term. Trying to get back here. And then BM&R, same thing. BM&R, I think, is a modern day Berkshire Hathaway. I think they're going to own a decent amount of a lot of companies. And then they are, oh, and I think that Tom Lee is a modern day Warren Buffett for basically tech. I really like his analysis. I like what he's done. I like his reputation throughout time. So I think that he knows what he's talking about drastically. And this company is down hard. Now it IPO'd, so don't pay attention too much to the all-time high here because IPOs usually kind of skyrocket and then drop off for the next 6 months to a year before people really understand what the company is because there's a lot of hype and pre-investors get out and take profits because they can sell usually after a 3, 6 month, or a year lockup period after it IPOs. So now we're coming down, 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 down. I mean, I think that we've hit a bottom right here at 1740. That's kind of what is showing me, kind of on the charts. We're bouncing off here a lot. Um, let's go and see the actual chart of it, the trading chart. I don't know why my computer's running so slow. Oh, shoot. I got to plug my stuff in. It should be okay. I'm not going to have this video on too much longer. Jeez, this is taking forever to load. But anyhow, BM&R. There we go. So it's hard to pinpoint exactly where this is going to stop because we don't have a crap load of long-term data for it. But it's broken down again out of this uptrend. So I don't love it, but I love picking up shares of this company. And right now, it did break open on the MACD. So it is bearish right now, but I really don't think that it's going to drop much below the 17, 16, $17 range. But I could be wrong. But this is one of those companies that I think picking up shares over time and getting back into the $30 or this $25 range is your first trading target. If you want to trade this, buy it now. Looks like a pretty solid support range, picking up right here on the $18 level. And then we've got some pretty solid resistance around 23, 24. So buy now, sell somewhere between 20, yeah, 22 and 21 and 23. And then you can kind of rinse and repeat. And that's what I would do with the trading on BM&R. But ultimately, I think long term is the best. I have a little over 300 shares of it right now, and I'm picking up $3 every single day. And then as I make trades and stuff, I will buy more shares along the way of all three of these companies to increase my ownership over time. I'm going to show you over the next 5 years as we increase ownership in these companies how this is really going to be very good for your account. But I have a very high cost average on this. I had some other trades and stuff that I was in, some other investments in this account, educational. So shows you that you can get in something very, very high. So every dollar that I'm putting in now, I'm getting a lower and lower cost basis on. But I don't really pay attention to cost basis too much, especially when it's coming up. I don't care if my cost basis rises. I want more ownership. Now, I think that BM&R is going to stock split a lot throughout time. And I think they're going to have 5 and 10 to 1 splits as the price of Ethereum and crypto and everything rises. So the goal with this is to acquire as many shares before they start stock splitting. And if they do a 5 to 1 split, that would already give me 1,500 shares of this. If they do a 10 to 1, I'd have 3,000 shares of it. Now, obviously, the price has got to do some significant upward movement and sustain that. But I think they said they want to keep the price around $20, $25 because it's more appealing to younger people. But the more shares that I have, I could do, like we already showed that somewhere between 21 and 23 is a pretty solid price to sell this at least in the short term. So that's where our safety net is. So 21 to $23 is paying $35 to $70 per contract, 3 weeks out. So $1,883 to buy 100 shares of this, and then you could sell it somewhere between 21 to 23, make $70 in 3 weeks while you're waiting for your trade to play out. That's just one contract. If I had 3,000 shares of this, I could do 30 contracts. So maybe I even played something more conservative, like above where I think it is. Open interest is good, plenty of volume, 25 is high, even if I'm getting close to $20 a contract. So I'm right there in this $25 to $26 range. I don't think this is going to happen given the charts. So if I had 30 contracts that I could sell and basically make, let's even say the low end of this, $20 a contract, every 10 contracts is 200. I can make $600 in 6 weeks just because I own a lot of shares of this. And then I took an analysis of where I think a good price to sell it would be. That's the power of ownership, and that's the power of learning and understanding options. So I'm going to come back here, stop sharing my screen. And now you get to see just my pretty face. Hi. So what I do, My short-term trades are okay. I'm getting better and better at reading charts and stuff like that, but I'm pretty good at helping people get an analysis on a trade that they do, or helping people understand the plan that they're trying to make, and I can make it better, or I can help you make it your own plan better because of my experience. Um, I stick to long-term investing more than trading, but I'm starting to build up my trading a little bit, my trading skills, because I want to make more short-term capital. But trading is more stressful, and you need to be even more disciplined than you are with investing. Um, but discipline is very important, and acquiring long-term shares of very, very good companies like the three that I showed you here over time is going to be the way that you build wealth. Um, yeah. So if you want to join my community, I'll put it in the link in the description. Get my quick start guide that'll help you ask more questions on what I actually do. Listen to my long-term investing and my short-term trading. I only pay attention to those. I only do the ones that I'm very, very highly confident in. Right now, SoundHound and SoFi, I think, are incredible buy zones, and I think that you can get 25 to 100% over the next 3 to 18 months on either one of those trades, and you can do that math yourself. So this is Finance and Investing Just Joey Style, and happy Memorial Day. Almost forgot. I want to address that real quick. I should have done that in the beginning of the video. I want to take a moment and thank every one of the people that have served in this country. It means a lot to me, because I get to sit here in my apartment with my dog and go do the things that I want to do every day, because I live in this country because of the sacrifices that men and women made, the ultimate sacrifice. They're no longer here with us so that we can do what we want to do. So I want to take a second to honor those people and thank them for their service and sacrifice. All right, this is Finance and Investing Just Joey Style. I'll see you next time.